Dear fellow traders, at the beginning of this video, I would like to express my gratitude to my patrons who made this possible, who support my platform in the past 2 years. And with their support, I became successful in developing different quantitative model. As you can see it here, this is a sniper. Sniper is a quantitative model that follows the trend and the sentiment. It's actually a combination of two of my quantitative model previously developed as swing and SOFA. Many of you are familiar with those two. SOFA is a sentiment analysis that tracks the sentiment of the market and offers the best um, option trading and the highest probability of success. And swing is a trend following system that offers stock trading direction and also options for longer term. I combine these two together, and now we can use this to track 100 tickers, 25 index funds, and ETF, the most traded ones, and the 75 of the most important and most tradable tickers on the market. This is the chart for sentiment analysis. As you can see it here, the sniper divide the market into 5 different categories based on the strengths of the signals: a strong buy, a strong sell, no action, sell, and buy. The difference is that when we have higher scores, these can show the uh, accuracy of the signal and the power of the signal. As you can see here today, we have like 23 tickers which are strong sell, 22 sell, which is like 45% of the market. Then we have like only 10 buy and only 2 ticker shows a strong buy. By clicking on this, it shows us the score and the significance of the strengths of the signal. As you can see it here, we have these tickers. Then we are going to review the chart for these tickers. We can have this and sort it alphabetically based on the strength of the signal or based on the score of the signal. We also can do search. This is going to be the application. It's the prototype. I use it. I want to make it better before I launch this. So as you can see it here, it shows the only two a strong buy signal for Palo Alto Network and Meta. Then we have a couple of buy signals like USO, which is the oil fund, CrowdStrike, ExxonMobil, GameStop, Netflix, AMD, Tesla, Chevron, Upstart, and Roku. So for example, if you want to see Apple, you search it and it shows you Apple is no action right now, and the score is -4. So it's in the good thing about this is that if you compare it with swing, it gives you the better idea which ticker you should focus on. My primary focus would be on each day, it would be the strongest. As you can see here, we go to the strong, we see that we can sort it based on their score, and then we can pick and trade based on the score, or your targeted ticker could be any of these. But today, other than talking about sniper, I would like to talk about the general condition of the market. And first, I would like to review the most important reason, the fundamental reason behind all this that we are experiencing in the market. I know the very short term issue would be the default or no default, the debt ceiling situation, but there is something much more important than that, which plays its role in the longer term. By longer term, I mean the second half of 2023. So if we go to this chart, we can see the US money supply, or M2, which is now in the past 7 months, it is below the 12 months average. As you can see it here, during the post-pandemic era, Fed flooded the market with money supply, 60% increase in less than 2 years, which almost doubled the money supply. But in the past 12 months, we see it 1 trillion decline in this. In the past 7 months, it crossed below the 12 months average. But what is very important is that the rate of decline of money supply accelerated. So this is the rate of change. It shows the monthly rate of change. Last month it was 1.22% decline, which is the fastest in the history of US, as we can see it here. So looking at this chart, you can see that this is the fastest decline ever happened, which plays its roles in near future, and it will change the consumer's behavior. If you are looking at this chart, you will see in the first 3 months of 2023, the consumer expenditure almost remained flat. When you compare this when the economy was flooded by money provided by the Federal Reserve, you see this huge decline. Now it is flat, and it could go lower. As you know, in the first 3 months of 2023, we see an increase in income and saving rate, but we have flat expenditure. So this shows the change in the behavior of the consumers. It means while Americans earn more money, they save more money and spend less. It is very important thing, and it can affect the behavior. This could be one of the reasons why Tesla, which is one of the hypest thing, and it's kind of a fashion today to drive Tesla, cut its price. As we all know, Tesla, when reported the last quarter earning, it was 1 billion, around 1 billion below the previous quarter, although they cut the prices significantly. So this is very important. I think this is the fundamental that plays the major role in the coming months. But there are few changes in the market that is really important. One of the most important one is the trading volume that happened in Berkshire Hathaway. As you can see here, we see like 5% decline in the past 3 days, which is very significant. If you are looking at the history of Berkshire Hathaway, this was the highest ever volume happened before 2010. So in the past 13 years, we haven't seen something like this. And you see after that, it is decline. We see a huge decline. So there must be a major players that unloading their Berkshire Hathaway, which is one of the safest bet in the market during bearish cycles. As we all know, Warren Buffett has a tendency to buy whatever he has during the decline cycle in the market. So this must be something very odd that happened, and this is, to me, a clear top formation. Some people may call it like a triple top, and as you can see, it breaks below the support line. From a candlestick point of view, this is called three black crows, which is very bad sign and indicate a huge decline is coming. So I can see another 10% decline coming in Berkshire Hathaway. So when one of the safest ticker in the market, we expect something like 10% decline, it will be huge in other riskier assets, which usually outperform the market. So having said that, let's go look at the Nvidia. Nvidia is really important because it's like the market leader in the AI hype. As you can see it here, Nvidia's price almost tripled in less than 9 months. As you can see it, from 108 to 316 happened less than 9 months. What is important about Nvidia is that although they talk about the AI and increase in the usage of AI, as you can see it here, Nvidia's revenue declined hugely from 8.2 billion to 6 billion. I expect the earning, which is today after the bell, will be somewhere around 6 billion to 6.7. So they are going to talk about the future usage of AI, and it is impossible to do AI without having Nvidia, but I hope they can show it that it caused a huge revenue change. Other than that, I consider that as hype, and it's just, it is cheap to talk. So it doesn't matter what you say, like this AI cause a huge potential in the future, but if you can materialize on it, if it doesn't increase your revenue, it doesn't matter whatever you say, because if you can't sell it to the market, if you can't sell your product, it is just talk, and it's absurd, at least to me. There is something that is very important, and I want to talk about it, which is the Elon Musk behavior and what he said about Nvidia. It wasn't about Nvidia, but it's, if you are looking at this tweet when he said AI to infinity, then people following AI news this week, this is a roller coaster, will become the same people next week. So far, Nvidia experienced more than 5% decline before the earning. I expect something between 4 to 10% volatility tomorrow for Nvidia. It could be in both direction, like something that happened to AMD, or could be the possible, could be the exact opposite. It gap up, then experience a decline, while AMD experienced a gap down and then goes up, then went up. After that, I believe for Nvidia it could be quite opposite. So I will not participate in any side of it today. However, if it gap up, I would rather do short it, and I will let you know about it if I do the same thing. So as you know, I have position against triple Q. I had SQQQ, and I bought it in the past 2-3 weeks. I'm a little down on it, but I will keep my position for foreseeable future, because I believe this rally in the market has topped and it is time to have some gain on the reversal of this trend. So this was my position before we continue to evaluate the other stuff that I would like to talk about. So reviewing this, I would like to talk about the cryptocurrency market as well. If you are looking at the cryptocurrency market, this is the Bitcoin chart. It clearly has built a downward channel and more decline is more probable. And I think it could go down to 20K soon, very fast, like something we experienced. If we look at this, this is a consolidation pattern that tends to go lower by today's change. So I believe this is going to go downward much faster than expected for many people. So this is looking at the this is the same case for Ethereum. If you are looking at Ethereum, it has the very same situation, and the total cryptocurrency market has the same situation as well. So the cryptocurrency could experience a huge downward movement, but if we are looking at other markets like oil, you could see it has built a double bottom pattern that could experience a higher prices for now or in a recent in the next 2-3 weeks. For gold, we have the same pattern. Gold is at the bottom of this channel. It could experience a huge surge in case of default and probably break above this. However, if we see a deal, this could affect gold negatively and we see a decline to 1800. It all depends on the deal or no deal situation. So this is also really important to have in mind. So I believe gold and silver can react opposite to the market, because if gold classically play a safe haven role in the market, and it can do the same thing in the next 2 weeks. So let's now review the default or no default situation. As you can see it here, I posted this May 23rd, day ago. I evaluate like the different possibilities for Kevin McCarthy increasing debt ceiling in exchange for lower spending in the next 10 years is like a very firm position. He kept insisting on this in the past few weeks and months, and he says that this is the Biden administration that is responsible for a default if it's going to happen. But for Biden, it has like, if he accepts the deal in short term, market will go up. But this fiscal drag, it could cause a long-term consequences like higher unemployment, higher budget deficit, and lower the growth, which could drag down the market in longer term perspective. If he rejects the deal, then the default and market will experience a crash. So the difference here is that this could be a lose game for Biden, but for McCarthy, deal or no deal is a win situation. If Biden accepts the deal, McCarthy wins. If he doesn't, McCarthy wins, because in the next election they can say, okay, it was because of the administration decision to not accepting the deal. So this is a really tricky situation for Biden administration. It is really interesting because Biden is a very good politician. I No matter what we think of him, he was at the top of the decision making in US for 50 years. He was in power, he was in Congress, Senate, all level of power. He experienced all level of power. He definitely is one of the most experienced politicians in the world. Uh, I know most people think he's a sleepy Joe, but I think I personally think he played this role to, because when your counterpart underestimate you and your ability, you can win them much easier. So to me, he's one of the greatest politicians ever, even in the rank of Winston Churchill or higher, because this guy knows what he's doing. So if he can turn the table and do something to turn a lose-lose situation to a win-win situation, it will be a magic, and it shows how capable he is. So for now, he is in a lose-lose position if he accept or not accept the deal. As of now, we know something that McCarthy is not going to change his position. So we should evaluate the Biden administration reaction to this. So they are either going to accept the deal and deal with the consequences later, which looks likely, or they are going to move toward default and take the hit sooner. This is really something that we can't do analysis on it. So this is really important. I believe I can't do any analysis about this. Other than this, I would like to talk about the analysis I published about Apple today. As you can see it here, Apple has made a perfect sine uh, wave. As you can see it here, the distance from here to here is equal to distance from here to here. This is very rare that could be a result of human behavior. However, it is likely. Yeah, I don't reject that, but it is the probability of this is a result of the human behavior is very low. Why? Because 50 to 70% of all trade is by algorithm in the market. So the reason I believe this is not the result of the human behavior is that when the majority of the trade are done by algorithm, this is the result of or the summation of human plus all the algorithms. Like, so if you consider all the players in the market, 20% is because of human behavior, and for 80 the other 50 to 80 or 70% is the result of algorithms. So the weight of the algorithms in creating something like this is much higher. So don't underestimate that. Then I would like to talk about this post. We all know that a couple of months ago, like exactly a year ago, we had this conversation on Twitter that Elon Musk was talking about. I published this analysis, and I said that why Elon and Tesla shareholders should afraid of Bill Gates. So first, I mentioned that like how big it was, like $500 million short position, but there is something about uh, Bill Gates. I believe that the pool of data and statistic he a statistical ability uh, he has access to is one of a kind. If you are looking at Bill Gates' position when he predicted the pandemic, a respiratory illness 5 years before it happens, if you are looking at one of the companies he owned by the farmland and made him the biggest farmland owner in the world uh, before the breadbasket of Europe put on fire by Russians. This is not something normal. And if you are looking at this, when it was around $1,000 a share, he shorted Tesla. Look what happened to Tesla after that. Tesla after the stock split, 1 to 3 stock split, it went down to 100. So this is quite rare. It was like the perfect time to short Tesla. So this cannot be accident. On the other hand, you see that uh, Elon Musk did the same thing about AI stocks. Then last week during the weekend, he said that he showed that roller coaster to the people. So Elon Musk is also one of the people who believes in data and whatever they have access to for making forecast works perfectly if you're looking at that. And this makes it very strange because if they use their statistical ability in the market, I believe this is going to be huge. And the huge, by huge I mean looking at the performance of uh, Renaissance Technology, where one of the pioneers in the I mean Robert Mercer started joining them, their business grew 10 times, tenfold. So this is the power of big data analysis and using that in the market. Renaissance Technology, we all know, is the most successful hedge fund in the US, quantitative hedge fund in the US, managing over 100 billions of dollars. And they use AI technology for many years, for many years. They have around 400 employees. None of them has background in finance except one. The other people are a mathematician, physicists, and statisticians. So this is really important about the AI situation. It has been here for many years and was used in the market analysis and quantitative trading for many years. So, having said that, Elon Musk in one of his tweets, he said predicting macroeconomy is hard, but we are going to experience a recession no later than 2023. When the data in the first 6 months of this year shows the a slowing in the growth, and the US GDP has fell below its average, but we didn't reach the recession so far. We expect to experience something like that in the next 7 months. So the long term, by long term I mean like the 6 months, looks downward. And we are, I think, at a good moment to short the market, probably. As you know, this is like my uh, expression, this is my estimation and my understanding of the market. But I am telling you this, to pick what we do, I am going to listen to a sniper. So I designed the system because if you are looking at this system, for example, if we want to check, look at this, like silver, it's a strong sell at the moment. However, we see Dow Jones, it says the strong sell. If we go to the Dow Jones and look at the Dow Jones chart, we can see like what happened in the Dow Jones chart. If you are looking at that, this is the Dow Jones. You see that this is a clear strong. If you are looking at the past 4 days, the lengths of the candle become bigger and bigger, and we had, if you go backward, you barely find something like this happen except somewhere around here. So this is really important. But if you are going to sniper and check, so let's go to the sniper. Let's see what's the strong buy. It's CrowdStrike, not Palo Alto Network, and Meta. Now let's check this. So Meta, You see, Meta is positive today. Palo Alto Network, look at this huge green candle. CrowdStrike, the same thing. Why I'm talking about this? Because if we are looking at the market movement, I believe most ticker has lost their correlation with the index funds and major indexes, because most of the changes in those three, like in Nasdaq, Triple Q, and the SPY, most thing that happened in Triple Q and the SPY was because of only 7 stocks: FANG Plus, which are Apple, Microsoft, Google, Amazon, Tesla, Meta, Nvidia, and AMD. So when we have a situation like this, we need something to analyze the stocks individually. So when you want to make decision, you see something like, okay, this one is like a strong buy and the market is negative. Yes, it is good if market is positive. The general like market is generally like we have a polarized market, which is generally like positive, like if we have, like, for example, above 50% a strong buy or a strong sell, we can say, okay, market is very polarized. But if you are looking 24 and 23, it's like 47% of the market is like in the sell territory. And if you are looking at these no action ones, still, if you want to look at like the positive ones, the negatives are more than the positive ones. We have a couple of zero, and we have, for example, if we are looking at these zero or non-action ones, let's go to, for example, Micron and Amazon and check these charts for them. So if you are looking at Amazon, you see this is not a good place to buy and not a good place to short, because it can go a little more higher and then experience decline. Or if we are looking at the Micron technology, let's go to the Micron technology. Let's go to the Micron. Look at this. This Micron technology, it breaks above the resistance. Now it's a pullback. So it can go up, retest this, or it can break below this. We are at the point that it's not a good time to make a huge decision. However, if it breaks below this, then it would be a better time to short this. So this is really important to listen to the model. So I myself am going to follow the model. If we are looking at this Triple Q now, if we want, it's -3. It may not be a good time to take action today, but as I said, I opened this position a couple of weeks ago and I still hold on it. I opened that because of what I told you about this chart, because I think it is going to be a huge shift in the fundamental of the market in the next 6 months. So the reason I opened that position was that, and at the time, it shows the signal to take sell position. So having said that, I expect more decline in the next 6 months. However, in short term, if we reach a deal, there is a chance that market celebrated for a transient period of time and then experience a decline after that. Please write your question in the comments. I will try to review them and answer them as soon as I can.